Hey, what is going on, everybody? It is me, Attorney Hattie Harp, and today we're going to be talking about cryptocurrency transactions and when they may be taxable and not taxable. Okay, um, whether you know this or not, the IRS views cryptocurrency as a virtual currency and intangible property. So they're going to treat it like a capital asset for the most part. And so, what a capital asset means, you're buying something like property and you're holding it for investment, and at the end of your holding period you're going to then realize a gain or a loss on the investment when you compare it to what you paid for the investment. So typically when we say what you paid for the investment, we are talking about your basis in the property. So if you bought one Bitcoin at $10,000, that is going to be considered your tax basis. And if you hold on to that Bitcoin for a short period of time, say less than 1 year, then you're going to be getting short-term capital gains. But if you've held on to that Bitcoin for a period of 1 year or more, then you're going to be getting the long-term capital gains treatment. And the reason there's a distinction between short-term and long-term, it's because short-term is taxed at your ordinary tax rate, whereas long-term gets taxed at a preferred rate, which is less than your ordinary income tax rate. So what transactions are considered taxable? Well, here we go. If you sell cryptocurrency, then that's a taxable transaction. If you trade cryptocurrency for other cryptocurrency, that is a taxable transaction. If you decide to buy something, whether it's a good or a service with your cryptocurrency, taxable transaction. If you are sending cryptocurrency from one wallet to another wallet that you own, that is not taxable. If you are buying cryptocurrency and just holding it, that is not a taxable transaction. So you really need to be cognizant of what might be taxable and what might not be taxable. But typically speaking, selling cryptocurrency is taxable, and selling it for whether dollars or other cryptocurrency, taxable. Purchasing goods or services with your cryptocurrency is taxable. So if you bought one Bitcoin, for $10,000, and then a year or two later or the next day you use that same Bitcoin, which is now worth $15,000, to buy something worth $15,000, then you have a taxable gain of $5,000. The 15 that it's worth now when you sold it for your good or service, as well as subtracting the 10, which is your basis. So 15 minus 10 is 5,000. Now, a final area of relevance here is receiving Bitcoin or cryptocurrency for providing goods or services. So if I agree to paint your house for one Bitcoin, then the IRS wants me to treat the receipt of that one Bitcoin as income on the day I received it. The amount that I report as income is going to be the value of that cryptocurrency, in that example, one Bitcoin, on the date of receipt. So if I received one Bitcoin today, one Bitcoin is worth $30,000 for painting your house, that's $30,000 of taxable income I need to report for painting your house. Moving forward, that Bitcoin is now a capital asset in my hands with a tax basis of $30,000. The reason I have a tax basis of $30,000 is because I've already reported the income of that Bitcoin, which was $30,000. So when I sell it for $50,000 down the line, I'm only paying tax on the difference between my realized amount, which is $50,000, less the $30,000 I've already covered when I reported it as income, which would be a gain of $20,000 in that example. So if you receive cryptocurrency in exchange for providing goods or services, just know you have income on the day of receipt equal to its fair market value, and moving forward, you now have a tax basis that's equivalent to the amount that you reported. Finally, I want to discuss how to answer the question about cryptocurrency on Form 1040. The question that typically comes up on Form 1040 is, let me pull it up here. This is, for tax year 2021. At any time during 2021, did you receive, sell, exchange, or otherwise dispose of any financial interest in any virtual currency? Every taxpayer needs to answer that question, and you need to know how to answer that question. The IRS has provided some guidance. If you simply bought cryptocurrency and held on to it and did nothing else, you are allowed to answer no to that question. If you received cryptocurrency as a bona fide gift from someone else, you can answer no to that question. If you never bought, sold, or did anything with Bitcoin or cryptocurrency, if you don't know what cryptocurrency is, of course, you could also answer no. However, if you bought and sold Bitcoin, if you received income as a result, if you provided goods or services and received cryptocurrency, you have to answer yes there. If you received a non-bona fide gift of cryptocurrency, you have to answer yes there. So you really need to know where you fall in order to answer that question inaccurately, because the IRS is going to be using the way you answer that question in the future in case of an audit, in case they found out you actually did enter into transactions in cryptocurrency during that tax year. So inaccurately answering that question could be a trap for some taxpayers. Okay, so that's a rundown of what are taxable transactions when it comes to cryptocurrency in the eyes of the IRS. If you want to learn more, you are more than welcome to book a consultation with me when it comes to cryptocurrency transactions, and maybe we can help you along the way. Visit lawharp.com to get on my calendar. Thank you, I appreciate you, and I will talk to you next time.